Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, steel spot prices were mainly volatile. The domestic hot-rolled coil spot price fell by 10 yuan ton this week, and the rebar price also fell by 10 yuan ton. At the macro level, the ceasefire agreement between Iran and Israel came into effect. Crude oil prices dropped significantly, returning to the level before the Middle East conflict, and inflation expectations vanished. The market's expectation for a Fed rate cut in July has increased, and the overall sentiment in commodities has returned to neutral. In terms of the industrial sector, the weekly output of the 5 major steel products continued to rise, increasing by 124,800 tons compared to last week. Specifically, rebar output increased by 56,600 tons, hot-rolled coil output by 17,900 tons, and medium-thick plate output by 42,900 tons. Currently, although hot-rolled coils face pressure, steel mills maintain good profits, leading to a further release of production. Meanwhile, the recent tight supply and demand in medium plates has stimulated output growth. On the demand side, the weekly apparent demand decreased slightly, with a weekly average drop of 43,300 tons. However, demand resilience is considered to exceed expectations, as the decline was lower than market forecasts, especially for medium-thick plates, where demand continued to increase. After the weather cleared in East and South China, part of the apparent demand for construction steel also increased, making demand perform well during the off-season, and expectations have been further revised. In terms of inventory, although production continued to increase, the 5 major steel products only accumulated 11,400 tons on a weekly average, indicating low pressure during the off-season. Inventory reduction was mainly driven by social inventories, while steel mill inventories saw a slight accumulation. In summary, at the macro level, trading related to the Middle East conflict has come to an end, and the market is focusing on the Fed's rate cut expectations in July. Fundamentally, steel demand is already in the off-season, but demand resilience has exceeded expectations. In terms of profits, steel mills still maintain good margins, and some coil mills may continue to increase production next week. Inventory pressure remains low, and previous pessimistic expectations continue to be revised. Meanwhile, supported by the rebound in raw material prices, there is sustained support for steel prices. As the mainstream shipping dates for current export orders have reached late August or even September, exports continue to strongly support molten iron demand. It is necessary to pay attention to the inventory accumulation speed caused by the seasonal decline in domestic demand. Looking ahead, if steel demand continues to show resilience, steel prices may maintain a moderately strong volatile trend. For procurement, it is only recommended to purchase based on rigid needs, while monitoring further changes in demand. From the institutional perspective, the current macro sentiment is generally bullish and market sentiment is strong. Coupled with the rise in raw material prices, steel prices have cost support. However, as the steel market is in the off-season, the overall upward space has not been opened. And most institutions remain on the sidelines, observing the sustainability of demand and the change in inventory status. In summary, steel prices have remained mainly stable and volatile recently, with price expectations revised. They may show a moderately strong volatility trend in the follow-up. In terms of varieties, billet is recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.